On stage with me, we have the powerhouse VCs talking about funding Frontier AI. So before we jump into questions, I'd like for each of you to just give a quick intro on yourself, your background, and your fund. Starting with you, Andy.
Great. Good afternoon, everyone. My name is Andy Tang. I'm with Draper Associates, and I joined the firm in 2007. And you probably have either heard of or worked with my partner, Tim Draper. So we have been investing together the last 20 years. And I'm a generalist, and we're early stage venture fund seed to growth. And happy to be here.
Hi, I'm Khailee 500 Global. We built our firm based on this idea that like the largest outcomes in the world have the majority of their revenues outside of the US, but also including the US. So whether it's going up from like 10 billion, 50, 100, all the way up, you see this percentage go up. So to build a platform that can invest in companies and take them all around the world, what does that look like? And how can we build that across decades? So today we manage about over $2 billion. We've invested in 3,000 companies in 80 countries. We've got a network of partners, and hopefully we can like build up to that dream. Yeah, that's me.
Very glad to be here. Always a pleasure. Thank you for having us. I'm Hemant Mohapatra. I'm from Lightspeed. Lightspeed is a global venture capital firm based in Silicon Valley, parts of Europe, India, Singapore, and China. We manage about $30 billion of capital globally, and very, very active investors in AI globally. We have made investments in practically every single foundation model company out there. We are investing in a lot of application and solution companies globally, and very active, in sovereign AI, which is one of the topics we'll talk about today across all regions. Companies like Mistral in France, Sarvam in India, and Anthropic in the US.
Awesome. So as we think about Frontier AI, I think it's important to set the stage with how you all define what Frontier AI is, given that every day we're seeing a new AI company pop up. So how are you guys identifying which companies are truly cutting edge versus what are smoke and mirrors? We can start with you, Andy.
Sure. So I kind of think about this idea of Frontier AI as it's kind of the level impact, right? When I think about there's the regular AI, there's the Frontier AI, and the way I think about it is this is really potentially the fourth industrial revolution, right? So if you think about the first three, in case you don't know, you do. Electricity, actually before that, steam engine, electricity, and electronics. So think about how each one of those things change the way we live, how humanity evolved, and then that level impact. And that's how we kind of think about what we think about Frontier AI. And I'll kind of give a very short example of how I think about what's interesting. With AI these days, answers are really easy to come by, right? Easy to find, but good questions are hard to find, right? So if you think about this really interesting AI model, this idea of the ability to have sort of problem solving, multimodal reasoning, planning, execution. If you put all of that together, I think that makes it a really interesting Frontier AI. And I'll do a small plug for the three of us, since we're in the venture capital business, right? So if you have some good ideas, and I'll just say, you probably wonder why the heck does this guy bring up a baseball bat?
I was afraid. I've never been on a panel with somebody with a weapon before. This is like, I was like shivering behind.
This could be a weapon, but it's really a sporting equipment, right? So if you have interesting ideas, come give us your best pitch. Hemant with, Lightspeed, and then Alex with 500 Startup Global, and Andy with Draper Funds. We'll hit it out of the park. And then I don't think any one of us are aiming for just regular unicorn or, a home run or even decacorn. We're thinking grand slams,
Grand
right?
slams, yes.
Grand slams and hectocorns, $100 billion in market cap, right? So with that.
Love it.
How is that? We need to fill these seats. If there are people outside, they should be coming in. Where else are you going to find a panel with a baseball bat and a baseball, right? Only here.
Andy actually flew 16 hours from San Francisco with this
With a
baseball bat.
I couldn't let you in. You know what I mean? I didn't like frisk you.
And he
Like,
certainly has more energy than any of us.
Security breach. And I'm not taking that home with me in San Francisco. So one of you is going to get the baseball and the baseball bat.
And he's gonna sign it.
Yeah.
All right, Khailee, next to you.
Well, Hemant's gonna go first. I'm kidding. Okay, here's how I break it down, right? What's frontier versus normal AI? I think right now, when we experience AI today, it feels like a very smart human, kind of like a superhuman. But what would a god do? What is human mode AI versus God mode AI? Gods can be described as omni-knowing, omnipotent. You can know everything and do everything. And in that case, like, what's the difference between human mode AI? Currently, we are prompting AIs to do stuff, but when AI prompts us, or maybe we are actually moving and acting in ways where we're not even prompted at all, but we're actually guided by this God. And is this God going to be a benevolent God, a wrathful God? And is there a God that we can have a real, true connection with that is in service to all humanity? I think taking some of this spiritual lens helps me kind of like differentiate the AI we use today and the AI that is being developed right now that feels dangerous to a lot of people.
Alex, are you sure that's not just your wife, omni-knowing?
I don't know, man.
Look, I mean, I agree with, I think, what has been said. Let me put a different perspective on this. Look, I think the world and the way we see kind of pretty much whatever is happening around the world in AI, and it's actually one of the most interesting times, at least in my venture career. Every 30, 40, maybe 50 years, the world goes through what I call an innovation super cycle. What is a super cycle? A super cycle starts when, 30, 40 years of research that has literally gone into the ground in some cases, like in the case of oil and steam. It unlocks a new resource that you can then scientifically discover, extract, and then commercialize. And when you are able to scientifically discover, extract, and commercialize in a repeatable way, that resource over time becomes ubiquitous, cheap, and available to everybody. And if it is a programmable resource, like steam is programmable, oil is programmable, CPUs are programmable, GPUs are programmable, AI token is programmable. When these resources are programmable, then you can unlock a new industry in its entirety. So what happened 100 years ago, before oil became commercially and readily available, 30, 40, 50 years of research had gone into figuring out where the hell to dig so that oil comes out from the ground. And when the US figured it out, they ended up occupying every country that had potential for oil. Because they knew that if I go to this region or that region and I dig, I will get oil. And that super cycle that took 50, 60, 70, 80 years to run its course meant that if you are in the beginning of the super cycle, the frontier of the super cycle is the extractive part of the industry. The companies that extract oil and make it available for others to do something with are at the frontier. As the cycle matures, those who are extracting are no longer the frontier anymore. They become commoditized. The value moves upstream. It's about what you do with the oil. The car companies accrue value. The airplane companies accrue value. Petroleum product companies accrue value. If you invested in a Exxon stock in 1990s, you would have basically come about at the same price 20, 30 years later. The right place to put your money was a different frontier called internet. So the same thing happened with CPUs. And the CPU cycle became commoditized. The value moved from putting money into an AMD or Intel to putting money into a Google or a Microsoft. Today, what's happening is we have gone through 30, 40 years of research and development, and now we have extracted this new godlike resource that you talked about, which is an AI token, which is programmable and readily available and getting cheaper by the minute. And the first few years of an extractive cycle, you should put money, the frontier is the extractive businesses. Who extracts the GPU cycles? The GPU companies, the companies that are building the fabs, right? TSMCs. Above that are foundation model companies. Above that are data companies. Above that are application companies. So we have very quickly moved from the frontier being ASICs and GPUs to maybe foundation model companies. That will get commoditized over time. To then it's the middleware companies, which was the hottest sector last year. So now what we are coming to is the application layer companies, the agentic infra company, which is where the frontier is. And tomorrow the frontier might be doing science with AI, doing research and development with AI. So that's how the frontier moves. And if you are missing the boat and you put money into the previous cycle of what frontier used to be, you will lose money. So you got to be, as investors, we got to be very cutting edge all the time. But that's what we think about when we think about frontier, as what is currently has the most alpha and where in the cycle we are. Because the cycles also compress very quickly. What took 80 years for oil would not take more than 8 years for AI.
Can I riff on what he just shared? I think that's actually a very refreshing and insightful way to kind of parse where the idea of frontier actually shifts, right? As things get commoditized. I think on a quantitative basis, you mentioned we're in a cycle of maybe towards applications. Would that be right to say?
Yeah, I think we are moving because the initial cycle was more about, and the frontier, if you're towards, like right now in AI, there are only two places that are easy to invest for us. One is the absolute left, which is the data centers, the energy companies, the ASICs and all, because it's clearly value is accruing there. And on the other side are basically consulting companies, because PricewaterhouseCoopers makes $1 billion in revenue purely in AI, and I'm sure other companies do that. Everybody in the middle is kind of figuring it out. And the more in the middle you are, the less clear it is. The middleware companies are the hardest to invest in. But value, excitement, and developer interest moves from the bottom to the top as the bottom gets more figured out. And now that's what's happening. The foundation model companies have basically, they're not competing on performance as much, they are competing on price. Because that's how the bottom layer works. It works on commoditization of the bottom layer, which is why the most investable companies, the bottom layer, are the ones that already have a lot of money.
Yeah.
Not the new ones, but already are capital intensive because they can price war you out of the bottom layer. And once you are winning the bottom layer, you have planted your flag, and then every apartment that is built on your land is going to pay you rent for the next 50 years.
Yeah.
And that's who are the apartments? The apartments are agentic infra companies, middleware companies, and application companies.
So I guess I was curious about that because I get a lot of flack for something which I'm about to share, right? I think that on the platform layer and the core compute, LLMs, then on top, let's say on the other end, you've got applications, then you got the middleware companies in between. I'm like noticing like this is instead of a 3-layer sandwich, I'm having like this like triple Big Mac or something. There's like so many layers, right? There's wrappers on wrappers. Like we were talking about SuperBase earlier in the back. It's infra, but it's also services on infra, for example. So there is like value capture at different parts of that. But the second thing that really kind of itch to scratch is that when I ask ChatGPT how many users you have, like every other month it says that 500 million, now 600 million, for example. But I also know that there are 5.5 billion internet users. Maybe 1 billion of them use Copilot, maybe 1 billion of them use Gemini and whatnot, right? But how about the rest of the 4 billion people? Like, are they using derivative applications from LLMs? Or maybe they haven't had the first LLM experience. Then I think about all the unicorns that exist today, the 1,300 unicorns that exist in Crunchbase right now, and how many of them are ready to be disrupted on the consumer application layer because of AI. So I actually do believe that there is a massive land grab opportunity. We just have to ship really quickly and iterate really fast, like get customers, use the customer trust and relationship and workflow and UX as the moat, and then start growing and building from there. It's messy, but once you got a wedge into the messiness and you got first 100 million customers to 10 million customers, build super fast, right? And then hopefully you build your bridge to something that's really fantastic. But I don't know. I get a lot of flack for that idea. So I don't know, like, what my fellow investors here think.
I mean, I definitely think that we kind of live in the bubble, right? We all use, ChatGPT, Perplexity, or whatever. But the rest of the world, I think the adoption has been very slow, right? So I think we got to do something to figure out how to speed the adoption. But I think in terms of thinking about we're always thinking, so I think Hemant said very well, there's the application side as a frontier now, because I think the LLM battle is done. We're thinking, how could you combine certain vertical applications to create the next frontier, right? So the wave on top of the wave.
Yeah.
So there's really two things going on. There's the adoption for the rest of the world. I think, what did you mention? Is that 5 billion?
5.5 billion internet users around the world.
Yeah, right? So there's a lot of people who are not using it, right? There's that. And then there's the people who are using it. What can we, other applications can we combine, like physical AI, that kind of thing, the implementation, creating more interesting the next frontier.
Yeah, I think the biggest barrier to adoption is technologists ourselves. Because if we're like so deep into the tech, there's a lot of UX things which are completely missing. So I'll give you an example, right? People are like, oh, we can use AI to automate anything. All right, Zapier's like taking a lot of this stuff, right? I had with one of my AI founders that say, hey, have you automated anything? He's got like a proper AI company, right? Like doing this and that. I said, have you used Zapier to automate anything? Okay, let's just automate something right now. So we spent like 15 minutes in front of Zapier, okay? And Zapier even launched like a vibe automation thing. He got lost. He gave up, right? And I helped him out with a few things. Because the schematics of so-called no-code, low-code is this graph and you're drawing arrows and this bubbles. It's as good as code, guys. Come on, right? It's not there yet on the UX. We don't have like the Canva of automation just yet. You're still at like the Photoshop of automation. Do you know what I mean? So I just think that the UX, guys, UX, we need more designers building AI. We need more product developers.
I think you need an AI to help AI adoption. Then it will just solve its own problem and it'll be done with it.
Oh, I'm working on that, believe me.
Yeah.
I love how this question has spurred a ton of different discussions. So I guess moving on, we are in a moment where AI is radically
Sorry.
where AI is radically lowering the barrier to entry in terms of building startups, and there are companies launching with much leaner teams nowadays. How is this changing how you evaluate early stage companies, and is having a leaner team a sign of leverage, or is that going to raise questions about defensibility and execution? Hemant, you can take it.
I'm very happy to go. Look, I think this is not unexpected, right? If you were to build a $1 billion revenue company 100 years ago, you probably need, I don't know, 1 million people to do it. It wasn't easy. Just to start, I mean, I remember as a colleague of mine way back when he started a company in 1998. This is much before my time. I was still in school back then. But you told the story that the job to start a company, you had to go find some place to rent and get servers and desktops and set up and power cables. And then you didn't have cloud, so you had to go get hardware to store stuff and get licenses. And they would come on CDs to your offices and you install them. And it will take months to do it, right? And it will require a lot of people to do it. Today, people pay you money to start a company. You go to Amazon and they will give you $500,000 to start something. And we have seen companies that have 100, 500,000 people that are a $100 million, $200 million revenue businesses. It is much easier to start, and it is much easier to scale now. The good thing about that is anybody and everybody, not anybody literally, but many more people can be entrepreneurs. The bad thing about that is the revenue pool gets fragmented quite quickly. So what we see happening is it is much easier now than it ever was to build a $1 million, $5 million revenue business. It is much harder now to build a $1 billion revenue business.
Yeah.
Why? Because there are a ton of these $1 million businesses that eat your revenue away.
Yeah.
Right? They will say, okay, well, you don't get white glove service. I have a person who will just do it for you, and their margin is 85%. I will take 75% and I'll give you customer service. But I don't really care about building a $5 million business. I'm happy with $2 million, 30% EBITDA and 5% free cash flow. It's good for me. So the world does not expand infinitely. So but the bar to build small companies has come dramatically down. The bar to build big companies has gone dramatically up. So we still care about pretty much the same thing: ambition, clarity of thinking, aggression, and the ability to really attract talent and capital towards you is as important as ever was in the days of Rockefeller.
Yep.
You go first.
I was going to say, so this is really interesting. You brought up this idea of it's so much easier to start business, and I'd love to hear Alex's view because 500 has been known to.
My name is Khailee, by the way. Just
to help people start business, right? So I remember when I first started, when we invest in companies, it's like $5 million to start a software company because you have to buy servers, right? But obviously with Amazon Web Services, you don't need to do that anymore. And I think we have already been on a trend of capital efficiency and talent efficiency. And I think AI is the piece that's really bringing that talent efficiency to the extreme. Sadly, we're seeing all the layoffs of the big companies, but I think that's the beginning of people doing more with less.
Yep.
And we're going to see that. We have seen that in startups to the extreme. And we have always been believers of lean teams, right people, fewer number of people. And I think you're going to see that multiples of, sort of multiples of magnitude, right? Because of the things these new engineers could do with AI that they weren't able to do before. And I think I'll go back to what Steve Jobs used to say, is that A players hire A players, right? So we're looking for those A players who will hire very few A players and get a lot of done with very few people.
Now you got A players creating A agents.
A agents will create A players again.
Yeah, there you go. That's God mode right there.
Finding A venture capitalists.
Yes.
Like us.
Yeah, hopefully, or just like tapping A capital. But coming to your question, I'll share with you like a quick story to encapsulate like how I feel about this, and I'll tell you my biggest concern. Now, the Duolingo, of course, teaching English is like, I started teaching languages, learning languages, big company. We didn't get a chance to back into Duolingo at all. The founder has gotten some flack for what he's mentioned about AI and implementation of AI publicly, whatever. We backed a company from a little known edge of Eastern Europe called Practica.ai. Joined one of our little accelerator programs we were doing for the government of Georgia at the time as part of our venture development work there. 2 months, they built a product to learn English by talking to a video avatar. You have free talk, you just like talk about whatever you want to talk about, and it corrects your English and that, right? 12 months after they shipped that product, they collected $20 million of revenue in the 12 months after they shipped the product. And then because they were so profitable, they moved to Dubai for tax optimization. But it was easy for them to move because they only had 2 staff. So it was two founders and 2 staff and $20 million collected revenue. What are you going to do, right? You're going to build a company? Like, you want to hire 100 people? Like, what are you going to do next, right? So they wanted to go for another language. It's not English, right? But they have to really rebuild from scratch, right? So I think it's interesting for us because it's like, I would love to have more ownership in that company. But at what price? And do they really need more money if they've collected $20 of revenue? So I'm a little concerned of 2 things. Number one is that we've graduated at 500 from seed investing all the way to like cutting $5 to $10 million checks. We have a facility for some types of companies that we can do $20 to $30 million. But it's like, what if that's not needed for the most successful companies? How do I actually get the most ownership upfront if I'm being really greedy? Yeah. But I've got another concern for myself. Out of the many unicorn companies I have in our portfolio, which of them are the Duolingos that will be disrupted by a lean AI startup that's going to come up and start giving them some serious challenge, right? Like, we got some companies in the call center software space, for example, and I'm like, okay, they are saying they're an AI company, but somebody else has no baggage, and they are completely super native in AI, and they're taking customers like crazy. So I am afraid I've got NAV risk, like, do I just mark them down because they're not AI enough? So, I need to return money to my investors. So I need to make sure my existing champions in my portfolio are well decked against the AI onslaught of some of the lean AI builders as well.
Right.
So, opportunity and also a risk.
Yeah, it's definitely a much more competitive space on top of an already competitive space. And I know, Hemant, you mentioned some traits of what makes the company successful. Which type of founders do you think are best positioned to really succeed in this next wave of AI?
You call.
Anyone?
You call.
What?
No, I've mic hogged enough. I'm going to step out. You guys.
Okay.
Maybe I'll say something to get started. I think Hemant actually mentioned this a little bit of the stage in which the industry is at, right? You started the foundation model, right? And then we're moving to applications. I think AI is still fairly technical at this point, fairly technical, right? At some point, I think it should become less technical and more human, for adoption. So I think at this moment, I still have a bias. I've always had a bias towards technical founders, but I think we have gone from super technical to now technical, right? Because it's still a very high technical problem, barrier to entry to solve. Mm-hmm. But at some point, I think we probably need to be shifting more towards two things. One is, which I talked about earlier, integration with other technology, other verticals. So those are less technical, but more about, multidiscipline. And then adoption, which is more about just appealing to human users to use this new technology.
Okay, so super interesting. That's still technical depth.
But becoming less so on a daily basis. I'm hoping.
Yeah. And so now that we kind of cover what companies get funded. We have a good representation from around the world. So we have Andy from the US, Khailee from Southeast Asia, and Hemant from India. I'd love to know from like those different regions, like what do you think the advantages are and the challenges are to building in each of those respective regions?
I mean, look, from India, there is, at this point, and this is specific to AI, but maybe broadly applies broadly as well. India is actually a really, really large pool of talent. And we are, at the end of the day, in the talent business. In fact, what we see in the US, about 40 to 50% of the deals we do, especially in enterprise and AI, are Indian founders that were born and brought up in India and then moved to the US and studied there and, worked there and then ended up starting a company. So from a pure intellect, hustle, hunger, ambition, the core intrinsics of what makes a great entrepreneur, we see a lot of that in India and in Indians that are not in India. And that doesn't change. Second, now this goes back to whether we are in the extractive part of the cycle or we are in the late part of the cycle, which is more distributive, where building net new frontier stuff is less important. Your Dropbox is no different from my Google Drive, is no different from your Office 365, is no different from whatever. Distribution matters more. Your brand matters more, your sales and marketing hustle matters more, your partnerships matter more. So depending on where we are in the cycle, the answers will change. But today, we are still in more of an extractive part of the cycle. An extractive part of the cycle for AI requires three things. It requires algorithmic superiority, so you can just get to climb the hill faster to the answers. You require data superiority, and you require talent superiority. Now, sorry, not talent. Talent is the same as algorithms because talent is the one that's going to build algorithms. It's more compute. So algorithms, data, and compute. I think India does not have enough talent today sitting in India that can do foundation level work. We have some pockets, and the pockets are expanding very quickly. And there's a ton of people moving back from other parts of the world to India to build companies in India, and we backed a bunch of those. But it is not at the same level as China and the US. So we have to be very selective in that part of the stack. On compute, I think if there is enough talent, compute and dollars will come. We've invested $45 million into Sarvam, and they're raising a lot more, so dollars will come. The data is where I think India has a massive advantage. Who do you think has the largest corpus of human-level data for medical research? That's Indians. It is an open market. It is the largest corpus and an open corpus. Who do you think has the largest corpus of video data? That's Bollywood. Who do you think has the largest corpus of audio data? It's a second most followed channel on YouTube called T-Series. It's an audio company in India. It's second after only Mr. Beast. And so on and so forth. Who do you think has the largest corpus of call center data across text and phone calls? It's India. And so on and so forth. So if you are to use the data as your advantage, assuming the playing field is equal on compute and on algorithms/talent, India has a massive advantage. We just have to go find a way to deploy it, but that's the advantage that India has.
I've been reflecting on this a little bit more because I think geography can be used as leverage. And these great examples, especially India. Like if you have a much smaller country with no talent or whatever, like there's maybe you have to leverage it in a different way. But I also have started to see a lot of geography as a prison. Some companies, they spend like 6, 7, 8, 9, 10 years serving, say, just Southeast Asia. But if their niche is a certain niche, there's only so many people who can pay for that type of business in Southeast Asia. So they hardly can get to $100 million US dollar revenue business as a result. But there are a lot of underserved markets around the world. If they translate their offering, the B2B SaaS, into Danish and just launch in Denmark, treat their global expansion as a story of cities that they can kind of cater as opposed to, so they don't have to I'm a Southeast Asian company, so I need to build for Southeast Asia, for example, right? Like don't let it be like a prison for you. Use it as leverage where these different geographies have advantages for. So I think the best examples and the biggest outcomes that we've seen from backing like companies like Canva or TalkDesk is that they like say Canva starting in Australia, use that, I mean, you work with what you got, right? If you're in Australia, okay, you take it, you got talent over there. But as they serve the revenue and get revenue from around the world, they continue to leverage Australia in a different way in the talent pools over there. But they've also built offices and hired people all around the world as well. So I think if you stay revenue religious and a bit like geographically agnostic, I think you have like a better chance of designing a company that is truly globally significant.
Definitely. All right, so we are running close to time with less than 3 minutes. I wanted to know if you guys had to write a $10 million check tomorrow into any frontier AI space, where would it go?
I've been very vocal on my LinkedIn. I'm an engineer by training, which means I prefer not to take science risks or, highly, difficult technical risks. So I like to take different silos of sectors that are already been proven. AI, autonomous driving, micropayments on crypto, CRISPR, healthcare technology, and kind of put them together, kind of integration play. So I would like to back technologies by combining two sectors, reduce the technical risk, but I'll take the commercialization and adoption risk.
We'll leave the ones with the biggest check writing for last. Right? So I'll go next.
You write the check to us.
Yeah, exactly, right? So we got some companies for you, Hemant, you know what I mean? But I'm definitely following adoption curves and valuation curves, right? Because sometimes like VCs, you back ahead of adoption because you believe the adoption is going to go up and then you pay for it, right? And some companies get overvalued because they pay too much and then the adoption actually tails off. But I feel like there's a lot of companies that are built by builders in a lot of these meetups. And I go to these grassroots meetups because I like hanging out with builders at these meetups. And I meet this is a really good friend of mine now. He's 27 years old. Like he's kind of stealthy, but his company, solo builder, like 14 months in, is doing 60,000 MRR. It's just him and himself. There's an Indonesian company out of Bandung. We really wanted to back this dude. He hasn't even graduated yet. That one I can out. His company's called Photosolve.ai. Was doing like 50K MRR, and he hasn't graduated yet. Has all his customers from the US, all his customer acquisitions off TikTok, but eventually he got an acquisition offer, so he's not taking VC money anymore, right? So it's kind of like, I feel like if these are folks which are gems for me, like the Practica.ai kind of examples, because they're getting massive adoption, but they've not been recognized or seized yet or been given the chance to get $2, $3, $5 million for funding or $10 million for funding to build something truly huge. The risk I'm taking there is a different type of execution risk because it's one thing to be an AI builder, it's another to be a company builder. And that's where like us at 500, we hope to support them with a community and some services to really help them build the companies out of their AI dreams.
Well, look, I think building a company is in no way needs to be performative. So best entrepreneurs don't really care what VCs are looking for.
Yep.
So keeping that aside, because I do really believe that the best entrepreneurs don't need to worry about what we care about. They just need to build to their customers' needs, and people will come running to pay you. What I do think is now possible for the very first time in my venture career is to build something that the world has never seen. And what we tend to see a lot of, I think globally, is we've got oil, and we've got horses, and we see many entrepreneurs trying to feed the oil to the horse, expecting it to run faster. What they should be thinking about is, where do I put this oil so we don't need the horse anymore? What took 10 days, 10 months should take 10 seconds. Okay, so what I'm looking for is to be surprised in a way that I jump out of my seat and say, oh my God, I did not think this thing was actually possible. Because their technology is almost there where you can build stuff that will surprise and wow and really make you think very differently, both in core science, where there is science risk, and I agree, and pure engineering risk. So what am I looking for to put 10, 15, 20 is an element of surprise without it having to be performative in its nature, an element of surprise where I feel like, shit, this stuff looks like a car. And I don't know what a car looks like because nobody has shown a car to me. But this thing runs faster than a horse ever will and will run longer than a horse ever will with no maintenance. What does that look like? I don't know. But a great entrepreneur will have the taste for it and they will show it to us. And then That's where my money goes.
Yep. Thank you. So if you guys are building something with a wow factor, you know where you're getting $10 million tomorrow. All right. Well, thank you so much for this insightful panel.